Stock statement. A stock statement is a business statement that provides information on the value and quantity of stock-related transactions. This statement describes how much stock was purchased at what value and when, and is a matter of accounts and finance supplied by the cash credit account holder, for example a private limited company, to banks providing loans at a regular interval. It details opening and closing balances for transacted items as well. Loan-providing banks are curious to know what its customers' stock values are at a certain date. To ascertain this value, an accountant first needs to know the existing quantity of his company's stock on that day. This quantity will then be multiplied by the rate of its market value and the result becomes the stock value. Making a statement of all kinds of stocks in a company's store on that particular time becomes a bank stock statement and also known as inventory statement. To know the existing quantity of stocks, an owner may count the materials in his stores. If the amount of stocks is very large, the accountant can opt for the following formula. Closing stock equals opening stock in cost plus purchase sales. Say, opening stock in hand in cost equals 2,25 pieces add, purchase during the period equals 5,50 pieces less, sales during the period equals 425,000 pieces, closing stock equals 350,000 pieces. After getting this figure 3.5 lakhs units, an accountant would multiply with per piece market rate. Say 3 rupees and 75 paise per unit. Closing stock becomes equals 3 rupees and 75 paise into 350,000 units equals 1,312,500 rupees. Banks give loans at a specific margin rate. If this margin is 10%, then for getting 20 lakhs Rs loan, a company needs to maintain the stock valuing Rs 20,00,000 plus 10% of 2 million equals 22 lakhs. If the stock goes below 2,200,000, then the bank may take the stocks from his debtor company.